Welcome back. Well, steady for the markets, 10,800. So we've given up a little bit of gains from the top of the day's high that we had for the Nifty, 10,816 or thereabout. But nonetheless, still steady, still good going for the December series and the mid-cap index, which is up around 0.3%. But let's discuss crude prices now. They've bounced back from 17-month lows, still at around $54 per barrel for Brent crude. What's the outlook for 2019? Virendra Chauhan, oil analyst at Energy Aspects, joins in for his quick take on this. Virendra, hi. Thank you very much for taking the time out. So just for the short term, what's your sense in terms of Brent crude prices? Which price do you believe more, the $50 per barrel or the bounce back that we saw all the way to around 53 to 54? In that sense, what are the chances of it probably softening from the current levels?
I think the way we're tracking oil prices right now is to look at global cues, and the bounce back we saw was actually in correlation with the equity market. So equity market staged a comeback and oil prices followed.
Virendra, that's the point. I mean, this huge amount of volatility that we're seeing, is it just a function of maybe thinner volumes, more people on holiday? And sort of let's talk about, first week of January onwards when we have more participation come in. This collapse to 50, is this sustainable or do you think it was overdone? What's the range, at least for January, that you'd expect?
Yeah, I do think it was overdone. I think there were some broad-based fears around the macro space, but I would have thought they're priced in now, and I think we need to keep an eye on OPEC. I think OPEC will be keen to stem the declines, and if required, they will kind of take action above and beyond the 1.2 million barrels per day it's agreed to cut alongside OPEC plus.
So, Virendra, what kind of range might you be working with, at least probably for the first 3 to 4 months, or the visibility that you have into 2019?
Yeah, I think in the near term it's the watching the equity markets, but it's $50 to $60. We wouldn't expect it to go much below that.
And what about probably retracing back to levels of over 80? I know it sounds very far gone now, but those were the levels that we were working with just in the month of October. So are you forecasting maybe a chance of it hardening to those levels if in case there is maybe some amount of a risk on that continues globally?
I think so, yes. So we do have balances tightening in the second half of 2019. Of course, a lot will depend on the trajectory of OPEC plus production. That's primarily Saudi Arabia and Russia, but I think they are keen to kind of stem the volatility that we've seen over the last 3 months or so, and so they will be looking to take action to kind of keep prices supported. I think they are looking at prices around $70 per barrel, which is a level which is more sustainable both for producers and consumers.
Just a number to get to 70, Virendra, how much oil do you think will start coming off the market if the intention is intact to get these supply cuts in, OPEC, Russia, all members coming together? What's the number you think will go off the market?
I mean, at the moment, we've got 1.2 million barrels per day factored into our balances. We do have 2019 is an exceptional year in the sense that we have a lot of refinery turnaround ahead of the IMO 2020 regulation kicking in. So a lot will depend on the extent of the refinery maintenance, and there are risks that refineries could be offline, and therefore crude demand could come in lower than expected. And if that happens, we would expect OPEC Plus to take action to keep the oil market in balance and prevent an oversupply situation.
Quickly, Virendra, just a quick last question then. The other big aspect I think the markets would be watching going into next year is shale production in the US. How critical would that be to determine crude prices?
I think it will be very important because the market is factoring in another 1 million barrels per day of growth. But the initial signs from some of the key producers in the Permian is that they are going to slow down activity in response to lower oil prices. Now, if we see this extending out to a number of producers, then the risk is that shale production starts slowing relative to the 1 to 1.2 million barrels per day of growth that's currently factored in. If that happens, then it's certainly constructive, supportive for prices.
All right, Virendra, we'll leave it on that note. Thank you very much for joining in. So that's a global outlook on how oil prices might behave in the near term. Let's take the commodity conversation forward, get you some trading ideas now. Kunal Shah of Nirmal Bang Commodities is with us. Kunal, greetings of the season. Now, we will talk precious metals in just a bit, but since we were discussing oil with the other guest, I don't know, for traders, it's sort of being whipsawed either side. There's so much of volatility. I mean, are you going with any oil bets, on a day-to-day basis right now?
Yeah, for the Brent, I don't expect it to go below $50. Whatever worse we've seen it in last week itself. We've seen a capitulation taking place in oil, and I think markets likely to stabilize. And like the other guest pointed out, we also expect that the U.S. oil production growth is likely to slow down going forward in next quarter itself. So you are not going to see a major surge in U.S. oil supply. And considering the fact OPEC is starting their production cuts from the month of January, I think the downside will be arrested here. WTI is not expected to go below $40. Brent, I'm not expecting it to go below $48. So from here, any decline for the traders, it's a good opportunity to go long, and you can see a good trading bounce from here. So 31, 80, 30, 200, good levels to enter long position for the upside target of 3350 to 3400 on MCX.
Okay. Kunal, just tell us what your commodity strategies would be for today.
We feel that metals have been beaten very badly, and year in the Santa rally has still not been witnessed in metals. So we recommend to go long in nickel at 750 rupees and expect prices to move up and test levels of 765 to 770 in a day or two. So with a stop loss of 735.
Okay, so that's on nickel. Let's just talk about trades, if you have any on gold and silver as well, because I know that we were having this conversation earlier. For 2019, the yellow metal is the one that you're most bullish on.
Yeah, we are bullish, but we've seen the US wicks again going down, the stability in the stock market. So you can expect a tad profit taking here and there, but the overall outlook bullish. Gold, we recommend it to go long, even at current levels, that's okay. Prices are expected to move up and test levels of 31,600 to 700 in days to come.
Okay, all right, Kunal, we're going to leave it on that note. Thanks very much for joining in and taking us through all of your commodities strategies. So that's the view coming in from Kunal Shah, as well as a view from on crude prices globally. Need to take a break now with the news that the advanced decline ratio is stable and the Nifty is holding 10,800. Up next, we're going to get back full tilt on the markets. We have Ashwini Gujral discussing technicals.